Hello and welcome to CMC Markets and this quick look at the week beginning the 13th of February, and it's certainly a big week data-wise. We've got a whole host of inflation data from China, Germany, the US and the UK. We've also got the latest UK unemployment data, UK wages data, UK retail sales data. So there's certainly quite a bit to get through, and the UK data will be of particular interest given the very dovish quarterly inflation report that we got from the Bank of England a few days ago. Now, since then, we've heard Kristen Forbes, one of the policymakers on the Monetary Policy Committee, talk about the fact that she's beginning to become uncomfortable but with the high level of inflation and could well be close to voting for a rate rise. Now, that's significant simply because she has tended to show more hawkish tendencies than the rest of the committee. Unfortunately, she is in a significant minority on that score, and she has only just announced that she will not be renewing her term on the MPC when it expires in June, which is a pity because I think a few more independent thinkers like her are needed on the MPC. But nonetheless, we'll see whether or not she is right in that regard. When we get the latest CPI data on Tuesday, we're expecting that to increase from 1.6 to 1.9% year on year, and I've written a blog post on the UK data which can be found in the news and analysis section of the website. This week's focus is not so much about inflation, even though we expect inflation to rise pretty much across the board from the data for January out of this week, simply because oil prices are much higher than they were this time last year, and that is going to filter through into the headline numbers. My focus for this week is going to be on Janet Yellen. Federal Reserve Chair will be speaking in a Humphrey Hawkins testimony for 2 days, first and foremost to the Senate Banking Committee on the 14th of February, and then on the 15th she will be talking to the House Financial Services Committee. And ultimately I think what markets will be looking for is significant clues or further clues as to whether or not the Fed is likely to move in March. Now, certainly some of the rhetoric that we've seen from various Fed policymakers over the past few days doesn't want to rule out the possibility of a March hike. Certainly a number of policymakers have suggested they want to keep that on the table. That being said, ultimately the wages data that we got out of the US for January did show a significant slowdown in wage growth, and I think that could well be a significant obstacle to a rate rise in March. Furthermore, Donald Trump probably won't have outlined his tax plans, despite the fact that he has announced that he's got some phenomenal announcement to make in 2 or 3 weeks' time. That could well have something to do with Dodd-Frank and the potential overhaul of that particular act, and I think that will be significant because certainly looking at Dodd-Frank, there are concerns that he may roll back some of the more some of the more sensible proposals that came out of that act. There are two parts to Dodd-Frank. Those two parts are the core legislation, which requires banks to hold much more capital against a financial crisis. Obviously that's imminently sensible since the crisis in 2008. The bigger banks have been a significant stress point and a worry for regulators, and as part of that core regulation they also created the Consumer Financial Protection Bureau, though one wonders where that was when Wells Fargo business was basically being dragged out. The second part of the Act is to do with reporting, so forcing companies to compare the salaries of their CEOs and employees, regulating how credit cards are used, how loans are done, what type of loan thresholds that are required or income thresholds are required with respect to loans. And I think the key battle there with respect to Mrs. Yellen's testimony to that committee will be her interaction with Jeb Hensarling. He's a vocal opponent of Dodd-Frank. He's a Texas Republican senator, and he's a strident opponent of Dodd-Frank. He wants to completely rip it up and throw it away. Now, the big question here is, how far does Mr. Trump want to go? Will we know over the course of the next few weeks what his tax plans are? So I think that's unlikely. So ultimately my view on a Fed rate rise in March is I would suggest it's still highly unlikely. But that being said, we could get further clues on that from Mrs. Yellen. It does appear that the committee, the FOMC committee, is divided quite equally between hawks and doves. So hawks, you've got Patrick Harker of the Philadelphia Fed, but on the other side of the coin you've got Neil Kashkari of the Minneapolis Fed, who's fairly relaxed about the monetary policy as it is at this point in time. And then earlier this month we had James Bullard of the St. Louis Fed, who was basically saying that he could only see the necessity for one rate rise this year. The difference with Mr. Bullard is he is not a voting member, so what he says doesn't really formulate into the overall equation when it comes to voting in March. So I think the key takeaways that I'm going to be looking for with respect to Mrs. Yellen's testimony to Congress and the House of Representatives will be her views on the US economy, her views on the sharp drop in wage growth, how much slack there is in the US economy, as well as her interactions with the Financial Services Committee and her views on the watering down of certain parts of Dodd-Frank and the Volcker rule. I think there is widespread acceptance that some parts of Dodd-Frank do need tweaking, shall we say, and I think if that's all that Mr. Trump is going to do, then that's eminently sensible. I think it's highly unlikely we'll get a large-scale rollback because there are equal numbers of Republicans and Democrats who will be significantly opposed to any sort of move to roll back certain elements of Dodd-Frank. So I think concerns about the widespread repeal of Dodd-Frank are wildly overstated. It really depends on the shape and the look of the reforms that are being proposed. But certainly looking at the banking shares over the course of the past few weeks, we've seen significant moves higher in companies like JP Morgan and Goldman. We could well see further gains there if we get any further information from next week's testimony, and also we could also see significant further gains in the dollar if we get any further detail or we get any further hawkishness from Mrs. Yellen with respect to a March rate rise. Okay, so that's it for this week. Thanks very much for listening. It's Michael Hewson talking to you from CMC Markets.